Hello, everyone. My name is Shweta Lawande. I'm a lead advisor here at Francis Financial, and I'm so happy to be here with you today. In this video, I'll be sharing the market trends that have an impact on your portfolio. Our aim with these videos is to keep you well informed and to serve as a concise overview of the key developments that took place during the month. If you have any questions at all regarding any of the topics covered today, please don't hesitate to reach out to anyone on the Francis Financial team. Without further ado, let's jump right in. So October was another challenging month for the market, with all asset classes providing negative returns, except for U.S. Treasury bills. This is largely because of higher interest rates continuing to concern investors, as did geopolitical situations like the ongoing war in Ukraine and the escalating conflict in Israel. Surprisingly, utilities, which has been one of the worst performing sectors year to date, has proved to be the strongest sector for the month with a gain of 1.3%. Similarly, the defense and aerospace industry also ticked up 2.7% for the month, largely driven by these global conflicts. And to end on a much brighter note, stocks rallied the last 2 days of October, and that carried into November with the week of October 30th, providing the best week since May 2022. The S&P returned about 6% for the week, and bonds rallied as yields declined. This month, I wanted to show you all how rising yields in the third quarter made bond yields more attractive, at least by recent historical standards. On this chart, you can see for each year how much treasuries will return if rates stay the same, if they rise by 1%, or if they fall by 1%. So, for example, a 5-year treasury bond would provide a 4.7 annual return if rates remain unchanged. However, if the rates fall by 1%, that bond would provide an 8.4% annual return. Conversely, if rates rise another 1%, the return would still be positive with a gain of 1.2% per year. So what we're seeing is that the higher current yields are providing a strong degree of protection for bond investors going forward. As we finish up the third quarter's earnings season, I want to emphasize how quickly markets can move. I mentioned towards the beginning that the S&P was up 6% for the week last week, and to us at Francis Financial, that's just another example of why keeping a long-term focus and staying invested in the market is of such importance. Analysts now expect fourth quarter earnings per share to grow by 3.9%, setting the stage for what we hope is a strong finish to 2023. So again, you've heard this from us before, but staying invested, kind of riding the movements of the market is so key during market environments like the one that we're in at this time. And please know that if you have any questions about your portfolio or your strategy, you can always reach out to any one of us at Francis Financial. And with that, I hope you found this update to be helpful, and we'll see you again next month.